Okay, so we had an event last week, and I talked a little bit in the event last week about momentum trading. And I got some emails from people that said asked me to expand on that a little bit more. And as it turns out, we did an event on momentum trading a year and a half or so ago. And so I'm going to go through that again with you. Again, the ground rules. I don't answer questions. Connor and some of the other traders that are here will help answer questions for you. I will answer some questions at the end if we have time, okay? So if you have a question specifically for me, wait until the end and I'll try to answer it for you when we get to the end. Otherwise, if you have questions about what I'm talking about, feel free to ask. Just understand I'm not going to be the one answering. It's probably going to be Connor or one of our other traders that we got a great group of traders that trade with us in the trade room every day, and they're happy to answer questions for you also. Okay, that being said, I'm actually covering up the chat so I don't get distracted, and I'm gonna press forward. We're going to talk about momentum trading. Now, a lot of you may be unfamiliar with momentum trading. There's a guy named Richard Driehaus. He was a fund manager, turned into a philanthropist. He's the founder and chief investment officer of Driehaus Capital Management. And he's often credited as the father of momentum investing, although he didn't invent it. He kind of took it to the next level. And Driehaus was, his whole concept was buy high, sell higher. And most people, that seems kind of confusing and counterintuitive. But he explained that momentum investor has the confidence that a stock that is high is headed even higher. Okay. The momentum investors rarely invest in stocks or any type of instrument because it's cheap and hope for a turnaround. Okay, that's kind of a big hope. That's a big ask in trading. Um, he ended up being over about a 12-year period very successful with his hedge fund with this momentum style of trading, and it has since been adopted by a lot of other companies and these guys that run these big HFTs and quants and the hedge funds and the big money, the smart money, are very often involved in some of this momentum trading. So we're going to talk more about that during this session. Before I do that, I want you guys to make sure that you understand that everything we're going to talk about is for education purposes only. Any results or performance stuff that I give you are hypothetical, yada, yada, yada. You've heard all of this stuff before. Please read this over. If you don't have time to read it, then do a screen grab or watch it again on video and stop it on this slide and read it so that you understand our disclosure statement about everything that I'm going to be talking about. Okay? So a little about me. I was a remodeling contractor, owned some hot tub stores. I decided that trading was going to be just so much easier than the businesses I was in, and thought that was my ticket. And 7 years I was struggling. I considered myself the world's worst trader. Eventually, I had kind of an aha moment, and that led to me actually developing the second brain trading system and NinjaTrader indicators. We've developed for other platforms, but subsequently went back to just developing for NinjaTrader because it's far superior to other trading platforms. Quick note, we've got another event coming up day after tomorrow. And this is about, if you feel like you're kind of stuck, we're going to give you the tools on Thursday and tell you exactly how to get unstuck in your trading. We're going to talk about some of the setups that we trade, kind of the whole logic behind what we trade, how we trade, what we trade it with. All of that information is going to be on Thursday. That says 11 a.m., but it's actually at 4:30 p.m. I should have changed that. So it's at 4:30 p.m. on Thursday. If you go to register, Connor can give you the registration link. It actually has the correct time in there, so I apologize for that. All right. So in trading, there's lots of ways to trade, but we're essentially talking about maybe three, and then there's lots of ways inside these three ways of trading. We have what's called value trading. Then we also have what everybody knows as trend trading, and then we also have momentum trading. So in order to understand momentum trading, we're going to talk about the other two just a little bit, okay? So we're going to talk about value trading. What's value trading? Well, value is just like what it sounds. If you can buy something for less than its intrinsic value and then sell it for its intrinsic value, you have a good opportunity for making money. If you identify that somebody's got a car that they're asking for very little money for it, and you could sell that for more money, okay? That's value trading, okay? This is traditionally based on fundamentals rather than technical indicators. Uh, the the uh, the value trader tries to buy stocks at a discount to their intrinsic value. These guys measure intrinsic value by taking a discount to future cash flows. If a stock price of a company is lower than the intrinsic value by what's known as the margin of safety, that's usually around 30% of the intrinsic value, then the company is considered undervalued. Okay, so you're gonna find a lot of trading in stocks from looking for undervalued stocks, and we're looking for if for the value traders, they're looking for the companies which are usually in decline, but the market has overreacted to that decline by pricing them too low. Okay, so that's going to be a value trader. Sorry, I didn't have this. I should have clicked on that to advance that. Okay, so now we're going to talk about the trend trading. Okay, so for a trend, you need to have at least two higher highs or two higher lows in a trend. Okay, so you see the little surfer guy surfing down the lower highs. All right, or at least two lower highs and two lower lows. Okay, that's going to constitute a trend. You're not going to see fundamental analysis in trend trading, or at least very little. There's always some overlaps between the value traders to the trend trader to the momentum trader. Okay, there's always a little bit of overlap, but generally speaking, you're not going to see any fundamental analysis involved in trend trading. Mostly technical analysis. When I say technical analysis, indicators. The most common are going to be what you might consider what you might use every day, and that's moving averages. And there's a lot of strategies for trend trading that involves using moving averages. So, for example, maybe entering into a long position when a short-term moving average crosses over and then goes above a longer-term moving average. And then you got to take a short position when a short-term moving average crosses below a long-term moving average. Okay, so that's how a lot of trend traders will tend to see a trend setting up. All right, then we have the indicators that indicate momentum. All right, so these strategies usually involve entering into a long position when an instrument is trending with strong momentum and exiting those positions when a security loses that momentum, okay, or that whatever the instrument is. And oftentimes, a good example of a momentum indicator is going to be the RSI, or the relative strength index. Okay, so some other ways of being a trend trader, you've got trend lines and chart patterns. These strategies usually involve entering long positions when a contract or stock or security trending higher and placing a stop loss between key trend line support levels. So if the instrument starts to reverse, the position is exited. Okay, a trend trader is going to rely on an established trend. They're not usually going to look for the beginning of a trend. That's pretty nice when you can do it. Not many people can do it. Okay, so you have to establish a trend first. And the issues with trend trading is it requires strong emotional and financial commitment. Okay, regardless of the chosen time frame. Traders will remain in their position until they believe the trend has reversed. Although reversals may occur at different times for each time frame. So, you know, you hear the trend is your friend until it ends, right? So, trend trading requires very strong financial and emotional commitment to be successful at trend trading. Okay. Now we come to momentum trading. Okay. Momentum trading is what we're going to talk about mostly today. Okay. So you remember in value trading, the buy low, sell high is the theme, right? In the value trading. The problem that momentum traders have with that is the waiting for the market to reevaluate the value of the instrument or the asset or whatever it is you're trading. Momentum traders don't want to have to wait. So they pick the assets that are already considered valuable with the hopes that they'll become just a bit more valuable in the short term. Okay? Momentum traders seek to take advantage of market volatility. Okay, they want to take short-term positions in stocks going up, selling them as soon as they show signs of weakness. Okay, and then moving their money to a new position. All right, so that's momentum trading. So let's think about this for a second. Let's think about physics in general. And then we're going to apply it to trading to try to make this a little bit easier to understand. Okay, so in physics, you have the formula P equals M times B, which is momentum equals mass times velocity. So if you got something heavy and you're trying to move it at high speeds, it's going to take time to get up to high speeds, right? If that heavy thing needs to slow down, it's going to take time to slow down. Okay. So if you think about a freight train versus a motorcycle, which of them can reach 100 miles an hour first? Which is going to need the longest distance to stop? Okay, obviously the freight train is going to take a while to stop. So how does that relate to trading? So we can think of mass in this formula above. We can think of mass as the number of contracts or stocks currently being traded, and velocity is the rate at which price is moving. Okay, so in this example, momentum investors are wanting to trade the freight train as it reaches maximum speed because they know that there's going to be that freight training effect. If the freight train hit the brakes, it can't stop and change directions. There's some momentum is going to carry that freight train for a while. And this is where momentum traders make their money. Okay. They see that the brakes have been applied, but they already know that the other traders in the market are going to continue to push that freight train or price a little bit more before price has the ability to slow down. This is very important. This is fascinating stuff. If you think about it and you go look at any trading chart, you're going to see what looks something like this. Okay? So for momentum traders, momentum is not a fixed amount or a percentage of the market. Okay, it's relative to recent the recent past. Okay, it's relative to the conditions that exist in the recent past. Momentum traders will take advantage of a trend. There's no doubt. The trend is very important to momentum traders. But what they're going to do is rather than worry about the longer term trend, momentum traders trade level to level to level inside of a trend. Okay, so they're trying to capture the small moves inside of a trend based on the aggressive buyers and sellers bidding up or down price by overwhelming one side of the bid ask spread and setting off a strong move in one direction. Usually it's temporarily over a short term, okay? But it's all relative. So we've got these areas where price is consolidating. You see all these areas in a trend where you feel like nothing's really going on, right? It's boring. There are no trading systems based on trading inside of activity like this, right? That it's really hard to design a trading system that is going to successfully trade inside this type of price action, okay? But momentum traders wait for the breakout of this type of action, okay? This sideways action. They're looking for, as soon as it breaks out of a channel, the breakout traders are suddenly getting excited. They're jumping in when they feel like, okay, here it's taking off. I need to get involved in this. All right, and the momentum traders will actually set them up for this. When I say them, I mean us. Okay, they set us up for this. Let's look inside this a little bit more carefully. Okay, so we've got price channeling, right? Price is just moving sideways. Could be there's no interest. Could be an area of accumulation or distribution. Excuse me a second. All right. All right. You guys can still hear me, right? Is the volume okay now? Volume okay? You guys good? Cool. All right. So we've got these areas of accumulation and distribution that we really can't do anything, but we watch them because we want to know when buying or selling sentiment increases with a lot of sudden bidding up or down of price. Okay, this is going to trigger the momentum trader's attention. Okay, they get triggered to buy up as much as they can, as fast as they can, causing a sudden shortage, which does what? Whenever there's a shortage of supply, what happens to demand? Okay, so that's all trading is supply and demand, right? So we're going to drive up prices even higher over the short term. Buyers begin to become exhausted. Momentum traders now get out of their position. They want to get in and out during this freight training effect. Okay, they want to get in when the freight train hits highest speed, and they want to get out as soon as they see the freight train start hitting the brakes. All right, so that buyers are beginning to become exhausted. Momentum traders start taking their profits. They dump everything before all the buyers have left. And then the sudden oversupply drives down price. Okay, this is very, very telling. So this kind of gave me an idea. You notice that none of those three styles of investing or trading involves one particular area of all of that I just showed you. So we have, the three parts of trading: value analysis, trend trading, and momentum trading. Okay. Let's take a look at a trend. Let's break it down into pieces. Okay, and here's the first piece. So let's look at this and let's try to decide what's going on at each point in this trend. Okay, so we look at an area where price is really low, and we might consider that being somewhat undervalued. Then price just kind of moves sideways. Maybe it drifts up a little bit, drifts down a little bit, but no real strong movement. Okay, this could be very low interest. It could be an accumulation or distribution phase. We don't really know, and as retail traders, we don't really care because that's not really what we spend our time on. Okay, because all of that is just sideways action, and us retail guys can't trade sideways. Price has to be moving up or down. All right, but we do care because when it breaks out of this sideways action, then we know we've got some momentum to consider. The momentum traders, as soon as we break outside of this accumulation, distribution, low interest areas, whatever this sideways action is, that's when they're going to jump in and buy. They're going to sell before price peaks out. They're going to overwhelm the supply, which is going to drive down price at least somewhat over a short period of time. So this goes on and on and on during the life of a trend. Okay, we get at the highest point where we're at or overvalued for this instrument, and then the whole thing starts again, right? Low interest, momentum, buying, selling. We get up, overvalued, same thing over and over. Okay, this is a trend, folks. This is what we're looking at inside of a trend. So after studying this, I started considering what was going on. So value traders really don't have a good, strong understanding of using technical analysis, right? They don't really know what's likely to happen next in the short term. They're using fundamentals for pricing a company or a stock or a futures. So they're not really clear on what's going to happen. Trend traders are generally going to have to be very, very good at managing their emotions and understanding all of the ups and downs of the markets and hoping that they have an opportunity at some point to exit a trade with a profit. All right, and they have to have very strong emotion management to do that. Momentum traders they're kind of slick because they set us up, and they're kind of buying and selling when price is at the highest. Okay, so I studied all of this and I started thinking, well, this doesn't really suit me, and none of those suit me. Of all of those, When I was trying to learn how to trade, you know, I was not, I'm certainly not a value type trader where I'm studying fundamentals for, you know, to figure out what's going on with a company and over time, you know, how is that company going to do and is their stock going to go up based on, you know, whatever the CEO is doing and, you know, whatever, you know, business plans they have and who got fired and who got hired and, you know, who's buying who. That didn't really suit me. Momentum trading, more for the guys with the big bucks. Okay. Problem with momentum trading for retail traders like us is we get excited and we have this FOMO, right? FOMO, fear of missing out. And we see price take off. And we're like, oh, I don't want to get left out of this. Look at go. Chances are you're jumping in right about the time the brakes have really kicked in and that freight train is slowing down, stopping, and reversing directions. That's about the time it takes us to figure out what's going on. So that left trend trading for me. Well, I realized over 7 years that I did not have the emotional control that I kept being told that I should have. That I need to think like a machine, that I need to, you know, just put on a trade and trust that what I did was the right thing and I should write it out from my point of entry to my target or my stop and just suck it up and do it. Okay? That didn't work for me either. So what's left? For those of us that are trying really hard to find an edge, what's left? What's left is the other side of what the momentum traders are trading. Okay? That's what's left for us because it is largely ignored by the rest of the markets. Okay? Momentum traders, market makers, smart money, retail traders, typically not that interested in what we call the pullback. Okay? The market makers, the big money's already finished up that round of trades and they're setting us up for the next round. When we trade these areas, we're entering relatively safe shark-free waters, at least for the short term. Okay? So this is our edge. So we've measured millions of historical swings, highs and lows. We've collected the data. We've compared all the similar conditions and apply the comparison to look for the same conditions in every bar, every trend, every chart. Okay? And we did that so we could anticipate that pullback. And what does that look like to us? So the results of this analysis looks like this for us. The momentum traders have caused an unnatural increase in buying sentiment. Okay? They're going to buy in here and they're going to sell in here. They're going to count on this freight trading effect from all of us retail traders that see this and they see all this buying going on and they go, oh, I got to get in this. I got to get in this. I got to get in this. I got to get in this all the way up here. Well, the momentum traders are already selling. While the rest of us are going, oh, I got to get in this. I got to get in this. Well, there's the freight train. All of this selling starts to overwhelm and there's no more buyers up here. And there's a whole bunch of stocks, contracts, whatever it is that you're trading that suddenly get dumped on here and no more buyers. So what happens? What happens? Supply overwhelms demand. What happens then? We get exhaustion. Exhaustion means that there's no more buyers up here. and the price just plummets. Okay, this is all basics, but and you guys see it every day on your trading chart, but you don't necessarily know what you're looking at. So when you're seeing this, this is what it looks like to us in the trade room. Okay, in the trade room, we see signals that look like this. For us in the trade room, that's a trade setup. We're going to trade that. Okay, we see strong momentum. We know that price is being manipulated. We know that the price action inside this bar suggests that the buyers are really strong, and then they start getting weak and the sellers are very active up in this part of the bar. That's this indicator right here. At the open of this bar, we know that although price is moving up, momentum has already shifted directions on the open of this bar. And that's where we place our trade, on the open of this bar. And this is a very typical chart for us. You might, if you're watching this on video, stop the video and take a look every time you see one of those stars. See what price does. Not every time, most times. If the star, by the way, if the star is below, and then remember, this star prints on the open of this bar, right? Not several bars later, on the open of the bar. And I'll show you this on Thursday. I'll have a video on Thursday and I'll show you exactly how this happens. All right, so if you do a quick scan here, you'll see that not always does it work. Didn't work on that one, but it worked on this one. Worked on this one. Uh, didn't work on this one, but it ended up, it had more freight training. Worked here, worked here. Okay, you're going to see this work most of the time. Now, how do we do that? First of all, what I want you to do is go look at a video that we have on YouTube, which is a typical kind of, can you, I'm sorry, I should have given you this so you could put it, you could type it in. Make sure you put it in the information on YouTube, that little description box. But put that link to this video in, and maybe type it in so people can click on it and go to it. This would be what we would consider a typical day in our trade room. And we'll show you exactly what I'm talking about here. And it looks exactly like what I just showed you. All right. We also show you on the video how you make money at this. We're looking for that very small pullback. Okay. It's generally very small before the trend continues. But that's where our edge is. So with our trading system, there's never any wondering. There's never ever any, I wonder if this qualifies. It's either yes or no. There's no maybe. There's no maybe whether the trade qualifies as a valid setup. It's either yes or no. That's what was always missing for me when I was a struggling trader. And I tried so many things, and everything was full of gray areas for me. And all I wanted was a yes or no answer. Good trade, not a good trade. And that's what we've managed to do. And how do we do that? We do it by Confluence. Okay, so if you look at any group of people, come from many different walks of life, many different professions, many different backgrounds and life experiences, and they all come together and agree strongly with each other. and they're looking at it at all these different angles, and then they all agree with each other. How credible is this group of people? Okay. If they're all coming up with the same conclusion, that probably lends a good bit of credibility to that issue or that problem that they're all in agreement on. And that's exactly what we do with our indicators. We have several indicators and we wait for them to be in agreement with each other, suggesting that now is a good time or the conditions are now right to have a high probability of something predictable happening. All right. Now, we've actually got it down to the point where we've combined a lot of these signals into a single signal. That was that star I showed you. That's our rock star indicator. That indicator combines what we've been doing for 10 years now, by the way. We've been doing this for 10 years. This exact thing for 10 years. How many trading systems are you going to find out there that are doing the exact same thing today that they were doing 10 years ago? They don't, because they keep their business plan is to keep things changing so that it's more interesting to people and that keeps them engaged. Okay, so their business model is to keep people interested by keep introducing new things. Okay, which I know this because I was one of the people that fell for this for years and never could gain any traction, never could seem to get off the launch pad. All right, so don't forget, sign up for, hopefully Connor put the link in there. I'm not looking, actually, I'll go ahead and uncover the chat now. Thursday, we're gonna get launch into, see what I did there? Launch into our trading setups and our indicators and how to use them and why they provide us such a strong edge. Okay. Now we've got a few specials for you. Okay. We've got multiple packages. Some people like to jump in and be fully immersed, and we really appreciate those types of people, because once they're fully immersed, there's no trying things, there's no kind of figuring it. They're involved, and they're going at it full bore. These are our Einsteins. We used to call them VIPs, and now we're calling them the Einstein package. Okay, that's the Einstein package, is everything that we do here and everything that we'll ever do here. So once you're an Einstein or a VIP, there's nothing else to buy. Any indicators that we ever develop, you get them for free. You get all of the indicators that we currently have. We've got unlimited trade room access. We have a training program. We have a new mentoring program that we're starting here in a few weeks, that you get for free. We have the priority support. We've got our essential add-on suite. We've got all of this is included in our Einstein. Now, I understand that not everybody wants to jump in that fast. So we have a couple of other options for you that you can start out a little bit more slowly. You don't get all of the indicators, you don't get all of the other stuff, but you can start more slowly to kind of work your way up to. Eventually, everybody probably upgrades to Einstein. Most of the people that buy the lower packages usually upgrade. I think we have several traders here that did it that way. So that's our special offer for you. It's going to expire on July 24th at 10 p.m. Okay. Now, I'm going to peer mentoring. Okay, good question, Bill. Way back, long time ago. Which Bill is this? Do I know you, Bill? Or are you the Bill that I just talked to a little while ago? No. Yes. No. Yes. So, yes, we talked today. Okay. Remember way back in the day we had a program called the Trader RX? That was a mentoring program where us, Connor and me, and at the time Praveen and Lisa, we would take on traders one on one and mentor them. And this is a true mentoring program. This mentoring program was a daily program where we analyzed every single trade you did and gave you feedback on every single trade you did. We held your hand through these exercises that are in the program. We made sure that if you were making mistakes, we'd point out those mistakes to you. It's a true mentoring program. The problem with that is it was really, really difficult for us mentors because it required so much of our time that it kind of started cutting into our trading, uh, time. The schedule that we keep to do our practicing and our own analysis of our own trades and things like that. So we kind of let that, even though it was a very successful program, we kind of let that go by the wayside only so that it didn't hurt our trading. But it is such a good program that I decided I needed to revamp it in such a way that it wouldn't require so much of my time or Connor's time or anybody else's time. Instead, it's going to be a peer mentoring program where you guys are going to mentor each other. And then Connor and I will oversee to make sure that it's being done properly. That's going to take much less time. Yes, exactly. This is. It's going to take much less time for us to provide as good or better service. Not only that, the people that are mentors, they'll be mentoring each other. You get so much benefit by teaching other people. And I learned that when I started the Trader RX program. I started mentoring people and I became a better trader because of it. All right. So that in a nutshell is the peer mentoring program. Now, Bill, you became a VIP a long time ago when it was cheap. You get that for free. You're already going to be included in that when we start it because you're a VIP, which is now the Einstein. So you're already in. All you have to do is tell us when you want to start, but we will send you an email first. Okay. So make sure don't hit me up with it just yet because it's not quite ready yet, but we're close. All right. Algo trader, do you have any statistical track records of actual trading results with your indicators and 10-year strategies? Yeah, being an algo trader, I don't think you're going to be too interested in my answer. Your assumption is that um, trading algos is better than being an actual trader. Okay, traders trade. We trade based on the conditions in the market. We're not counting on computers to do things for us. Indicators do what, algo trader? What do indicators do? Can you tell me? I understand your question. Are you still here? Maybe you left. Maybe you got tired of waiting for me. They indicate, right? So what kind of statistical track record would I give you that something does or does not indicate that a condition in the market exists? I can tell you we're 100% accurate, and our indicators are 100% accurate. So our actual results are 100% that the indicator indicates that a condition in the market exists. It's up to the trader to decide if those conditions meet his risk tolerance levels to enter a trade that they have already decided fits their trade plan based on their risk criteria. Yep, yep. So I'm not an algo trader. I'm not an auto trader. I'm not any of those because I will personally beat any algo trader out there. I'll beat any auto trader out there. If auto traders worked that well, why aren't we all trading them? That's the problem with them. Okay. They would be, anybody could go out and buy one, could use them, make a bunch of money. We'd all be using them. Unfortunately, um, it's almost impossible to get them to work forever. And by the time you figure out they're not working anymore, it's too late. You've already lost all your profits that you made earlier when it was working. All right. So you gotta, that's I tried for a long time to be an auto trader because remember I said that I was unable to manage my emotions as it related to trading. I was horrible at it. I thought I was broken. I thought there was something wrong with me. So I thought, well, here's what I'll do. I'm going to create or buy an automated system that will make all the money for me. It will remove me from being accountable for trade decisions. It will remove me from being accountable for trade management and emotion management. That didn't work too well either. I lost more money on auto traders than I ever lost on manual trading. Yeah, we're all about rules, but you're gonna be uh, not automating it and letting the computer do it for you. Okay, that's and our indicators are Bloodhound compliant. I mean, if you want to plug them into Bloodhound and you want to try to create some strategies, you feel free. You know, feel free to do that. Um, I'm gonna beat you. I'm gonna be better than you. But then again, I've got a lot of experience. All right. Any other questions? And I appreciate that question. Um, any other questions? All right. All right. Well, everybody, I hope you're going to come hang out with us on Thursday. I'm going to go into more detail, much more detail, about how and why the other side of momentum is where the highest probability trades are. And I really appreciate you all of you for coming. Hopefully, we'll see you Thursday. If you've got any questions, hit us up at support@theintentionaltrader.com. If you're ready to move forward, we've got the offer down here at the bottom, or this special. Go to our link right down here at the bottom. Connor will get you all hooked up. If you've got any questions, check with Connor. He'll get you all squared away. All right, everybody. Thanks for coming, and we'll see you all soon. Bye now.